Hi and welcome to our weekly report for the week starting Monday the 16th of March. We have left behind us yet another volatile trading week due to corona pandemic impact on global economy. The week ahead starts with Chinese industrial production and retail sales figures on Monday. On Tuesday, we should be on the lookout for UK unemployment rate, Eurozone ZEW economic sentiment, US retail sales and Japanese trade balance data. Going forward, Eurozone and Canada consumer price index figures, US crude oil inventories, Fed interest rate decision and FOMC press conference will be closely watched on Wednesday. On Thursday, the main point of interest is reserved for Bank of Japan interest rate decision and monetary policy statement, in addition to US jobless claims data. The week will finish on Friday with PBOC interest rate decision and Canada retail sales. Now, let's take a look at few markets. This is the end of day or daily chart for euro-dollar currency pair. We can see that we saw a substantial pullback from 1.15 level, and this was due to not so much euro weakness but US dollar currency strength. Key trading level going forward is at 1.10. This was the previous level of reference. Below that we have 109.70, so about 30 points is a zone of about 30 points, which would be clearly closely watched as additional downside support. The current lows at 110.50, 110.60 are also very important because they represent a 61.8 fib retracement from the current 107.85 all the way up to 1.15 high, so low to high, a full 61.8 fib retracement. Obviously, if we lose that level, then obviously the price can dip lower, targeting 110, 109.70. Confirmed loss of that level would open the way for a deeper corrective move lower towards 109, 108.40, possibly even 108. Alternatively, if 61.8 fib retracement holds, and this is also our 50-period moving average in daily, support holds, and we see an oversold bounce back, any upside move is initially capped by 111.60, above that 112, cluster of these previous highs. Breakout above 112 could open the way for a spike higher towards 112.85, 1.13. Cable, sterling dollar appears to be showing a very similar picture. Sterling weakness and US dollar currency strength. We are seeing a corrective pullback lower. Key trading levels going forward is at the cluster of these previous lows and also these highs here from August time and also October time of 2019 at 1.22, nice and round number. So if we see an oversold bounce back into initial upside resistance at 124.30 and move lower, or if we see a gradual move lower and loss of 122, that could open the way for a spike lower towards 121, 121, 1960 to the downside. Alternatively, if we see a rally higher and break above initial resistance at 124.35, that could open the way for a spike higher towards 126.30. Breakout above that level could target 127.70, 128, 128.80 resistances on the upside. But yet again, this represents US dollar strength. Very similar situation in dollar Japanese yen, therefore US dollar strength. We are seeing a push higher in this currency pair. Key trading level going forward is at 107 as a downside support, followed by 106.30. If we see a corrective pullback from the current levels into that level and a rally higher, that would support bullish outlook, potentially targeting an extension to the upside, targeting additional resistances towards 109.25, breakout above that level 110, 111, possibly even 112, which would be signifying this cluster of these two highs from 20th and 21st of February of this year. Alternatively, if we see a dip lower and a loss end of day close below 105, 104.55, that would negate the bullish outlook, potentially opening the way for a dip lower towards 103, 102, therefore Japanese yen strength and US dollar weakness. Gold is also showing the same thing. Apologies, I keep repeating the same thing over and over again. We are seeing a massive pullback lower in gold from 1700 all the way down to the current closing level at 1530, 1526. But the intraday low from the trading range was very close to 1505, or as close to 1500 as possible. Going forward, we are seeing this rising support trend line. We have 200-day moving average at 1510, 1511. Offering initial support to the downside, so therefore a key trading level. Confirmed loss of that level and end of day close below would signify further bearishness, potentially opening the way for a deeper corrective move towards 1465, possibly even towards the cluster of these two lows at 1450. Alternatively, if we see an oversold bounce back and the rally higher, the initial resistance is at 1585, which was that breakout level that we talked about over and over again. Breakout above that level 1607, 1650, 1670, possibly 1700 again as a retest of that high. Crude oil is going sideways at the moment, looking for a direction, seriously oversold levels as indicated by stochastics. This is a daily time frame for crude oil. This is more kind of reacting to a supply and demand situation rather than just the US dollar strength. But key trading levels going forward is at 30, nice and round number. Confirmed loss of that level could open the way for a deeper corrective move towards 27, 26, 50, possibly even 25 to the downside. Alternatively, if we see an oversold bounce back and a rally higher, the initial resistance is at 37.30, 37.20. Breakout above that level could create a short squeeze, potentially targeting swift move higher towards 40, 41.30, possibly even 45 resistances on the upside. Thank you for watching. Thank you for listening. Stay safe. In addition to volatility triggered by coronavirus, next week we have plenty of central banks are scheduled for the interest rate decisions and also monetary policy statements, and it's quite possible that they might say something to offer a bit of a support to the global financial markets in general. So stay safe, happy trading, and talk to you soon. Bye for now.